Okay, let's get started. Good morning. And this is Hakan from American Turkish Friendship Association, our business programs. Today, we have a distinguished speaker, Limay, and we are going to talk about PPP loan. Let me have a brief introduction about our speaker. Robert Limay, CPA, is the president of Limay and Company, a local CPA firm providing tax and accounting assistance to businesses throughout North Virginia. Robert has over 30 years of experience in the financial management of micro to small business. He has helped countless entrepreneurs realize their dreams of owning their own business by guiding clients through the process of launching the business, managing growing pains, and even assisting in the successful company. Robert is a frequent speaker for the Community Business Partnership and the Mason Enterprise Center. He speaks on topics relevant to the financial accounting, management, and taxation of small businesses. He also provides monthly counseling sessions for the clients of the CBP and the MEC. In addition, Robert provides educational seminars for SCORE, the Greater Springfield Chamber of Commerce, Virginia Tech's continuing education program, and other organizations upon request. Yes, Robert, thank you very much for being with us today. Please, floor is yours.
Thank you very much, Hakan. I appreciate this opportunity to sit down and just have a conversation about the PPP loan forgiveness. We're seeing a lot of businesses have gotten the loan, they've received the money, and now they've used it and they're like, gosh, I really don't want to pay this back. And so we need to understand the forgiveness process on how we apply for this and how it affects our businesses so that we get the most back, that we don't have to pay as much, hopefully. So I'm going to just go over the outline today. There is an application. It needs to be updated. I do want to comment that the SBA did release, not the SBA, there was a bill passed at the beginning of this month in June that changed the loan forgiveness portion significantly. And I'll touch upon that and how that impacted the process. I expect a new application to be released. To date, the SBA has not released that, and there's some areas that we need some guidance on, and I'll talk about that as well when we get into that. So let's go ahead and dive in. I would ask if you, as you're going along, if you have questions, please put them in the comment box. And at the end, we will go over the questions, and I'm in no rush to get out of here. So I want to make sure that your questions are answered and we get those covered. So if you don't understand something, please pop it in there. And at the end, we'll go ahead and cover that. But I will try to go over this slowly. I always have the caveat. I'm from New England, so that means I talk really fast typically. And when I get excited, I talk fast. While I'm an accountant, we're talking about taxes and accounting things, which gets me excited. So I have to try to remember to slow down. So I will try to go slowly with this for you today. But don't hesitate to ask a question if I went too fast on something or if you just don't understand it. So there's multiple rules that you have to follow with the PPP. Some of these you know when we applied for them. And now we're looking at the forgiveness and we need to follow certain rules to get the forgiveness. So what are these? Well, the first rule we already realized is that time period to spend the money. We got 24 weeks to spend that money. And before the law change, we had only 8 weeks. Now we have 24 weeks or until December 31st, whatever comes first. We have two different periods. We can either use what's called a covered period or an alternative payroll covered period. And I will talk about those a little later on, what those mean. But it's pretty much where you choose how you track your payroll expenses. The second rule that we got to follow is how we use this money. So that was the time frame, but how do we use it? But we need to spend a minimum of 60% of the funds have to be spent on approved payroll costs. All right, I can spend more, but a minimum of 60%. This used to be 75%. And I can spend no more than 40% can be spent on other approved costs. So I can spend less, but I can't spend more than 40%. And again, this changed. It used to be 25%. So it gave a little bit more flexibility with the law change on this. The other rules, this is more when we're applying for forgiveness to get the full forgiveness account. We can't decrease our FTE count. And what I mean by FTE, this is the number of staff that you have. FTE stands for full-time equivalent. So they're looking about hours, and we'll talk a little bit about that as I get through the slides. The other rule is we can't reduce our salary for our people that are on salary, or we can't reduce an employee's wage rate more than 25%. We can bring it down to 25%, but we can't go past 25%, or we're going to risk losing some of our amount that we're eligible for forgiveness, okay? And of course, the last rule that I always like to point out, it's not a hard rule, but it's something that sometimes business owners sort of overlook, and that's borrower certifications. We got to state that everything is correct. And so I'll talk about that a little bit when we get into there, okay? So those are basically our 5 rules that we have to follow for the PPP forgiveness. So let's take a look at the first rule, that time period. Now, right now, we have 24 weeks, and it's basically, when they talk about that, that's our covered period. Our covered period is the time frame that covers us basically to spend this money. And it's 24 weeks, or as I said, December 31st, wherever it's earlier. And pretty much it begins the date that the loan is funded. So in my example here, if I got the money on May 1, that's the first day of my covered period. That's the first day I have to start tracking this money and watching my employee accounts and things like that. That's the beginning of my covered period, is May 1. Then I go until October 16th, which would be 168 days later, or 24 weeks. And that is the end of my covered period if I'm using the 24-week period, okay? So I have, that's the covered period, all right? Now, if you already have your loan proceeds underneath the new law, you can either have that covered period, the 8 weeks, the original 8 weeks. And I have some clients that are like, gosh, can I keep the 8 weeks? I'm going to be able to use up the money in the 8 weeks. You most certainly can. If you're not going to use the money up in the 8 weeks, then you want to use the 24-week period, okay? But just so you know that we can choose that. If you don't have the loan, then, and you apply today for it, you get the funding, then you don't have the 8-week option. It's 24 weeks. All right, then. So let's talk about that alternative covered period. So I talked about the covered period, and that begins the day I got the money. Well, for payroll expenses, I can choose an alternative payroll covered period. And what do I mean by that? This is basically, if I am paying, and I'll use my company as an example, we pay every 2 weeks. We're bi-weekly. Or if I paid my staff weekly, all right, then I can choose an alternative payroll covered period. And basically all that is saying, instead of May 1, the date I got the money, my period to track the payroll expenses will begin the first pay period day after I got the money. So if we look at the example that's listed there, May 1 is the day I received the money. But May 4th is the start of my pay period. So if I wanted to use the alternative covered period, then I would start tracking my payroll costs beginning on May 4th, not May 1, okay? And then I cover the expenses that are within that window. I go out the 168 days or the 24 weeks, and it will end on October 19th. That's the end of my alternative payroll covered period. Now, if I'm using the alternative payroll covered period, though, I have a little bit of flexibility. Underneath the covered period from May 1 out 24 weeks. It's what are the checks that I actually wrote? What did I actually write a check for? Give it to my employees. Those are the expenses. For the alternative cover period, my example, it ends on October 9th. The last pay period ends on October 9th. But I don't issue that last check for the ended on October 9th until the following week. I issue the check on October 23rd. Well, I didn't write that check within the 24-week window, but because the payroll periods were within the 24-week window, I can include that check as an expense. Now that is only if I use the alternative covered period. I can't use a mixture of the two. So if I had a paycheck that I issued on May 1 and I'm using the alternative covered period and my first pay period begins on May 4th, then that check that I wrote on May 1 does not count as an improved payroll cost because I'm falling within the alternative covered period. So I track on May 4th going out. If I use the covered period, then that check on May 4th would count, but the check I wrote on October, not May 4th, the check I wrote on May 1 would count, but the check I wrote on October 23rd would not count because that's outside the covered period. So I just want to make sure you understand these two. It's kind of an important thing to understand when you're looking at how do I track my expenses? What are those qualified expenses that I can use as far as payroll? And so it's these two windows of time that you look at, okay? All right then, let's talk about the use of funds. So that's the window of time that we use those funds is the covered period or the alternative covered period. But the funds have to be used, as I said, like 60% got to be used for payroll costs, all right? This again was previously 75. They've lowered it to 60 now for payroll costs. Now, payroll costs will make up two different things. We have cash compensation and non-cash compensation, but it's all payroll costs. So for my cash compensation, this is the gross payroll to employees. It's that total money that I paid my employees before I subtracted anything. So if you have an employee that you paying them $1,000 and then you withhold Social Security, Medicare taxes, you withhold state and income tax, federal income taxes, maybe you withhold some health insurance and things, that they're contributing. So you have this stuff that you subtract from their check and they end up getting a check of say $600. We're counting as gross is the $1,000, not the actual check you wrote. It's before deductions. That's what we're talking about here, okay? It includes pay that if I paid the employees leave, if I gave them bonuses in the normal course of business. Also, maybe I have people laid off and I want to pay them. Well, it'll include pay to furloughed employees as well during that window of time, all right? The gross compensation, that cash compensation is capped though at $100,000 annual per employee, and that is prorated for the period that we're looking at. Meaning that for the 8-week window, if I'm going to use the 8-week period, the max that I can have as payroll costs is $15,385 per employee. If I'm using the 24-week, it's $46,154 per employee. And if you did that out, you'll see that that caps us for the year at $100,000 if we were to stretch it out the entire year. Paying at the same rates, okay? So it's capped at $100,000. If you're paying somebody over $100,000, you can pay them over that, but only the payroll that's $100,000 will count as qualified expenses, all right? Now, I do want to stress you're not limited to 60%. A lot of people think that the PPP program was designed as a business bailout, and it really was not designed as a bailout for business owners. It was designed first and foremost to keep people off of unemployment. That's its purpose. And so if you use more than 60% for payroll, you're not going to get penalized. They're actually, you're doing what they wanted you to do. You're giving the money to the employees. So that's great. So you can certainly use more than 60%. They're not going to penalize you, okay? Now, this does not include funds that are covered by the FFCRA, and I'll talk a little bit about what that is. That's the Family Flexibility Care Act. I can't remember the exact acronym. Should change the slide so it's there. But basically, early on, before they came out with the PPP program, they came out with a program where all small businesses had to extend 2 weeks of sick leave to all staff. And that sick leave covered if you had a staff member that was homesick, diagnosed with COVID, if they were home taking care of somebody with COVID, if they were quarantined under doctor's orders because of the potential risk of COVID or exposure, so 14 weeks, or I think the other one was if they were taking care of a child that because their school closed and you didn't have childcare and they had to be home to take care of that child because of COVID. So basically their leave was directly related to COVID. You had to extend them by law 2 weeks of leave. Well, in exchange for that, they're giving businesses a credit, a payroll tax credit. I'm not going to get into that tax credit in this session. That's another session for another day. I just want to say if you're using that credit, then those would not be also expenses that we could use for payroll. So you can't do both. I can't get the credit and use it for the payroll costs that I can eventually get forgiven, okay? All right. Let's talk about the non-cash compensation. So that was cash compensation. Now the non-cash compensation. These are the group health insurance that is paid by your company. So if you have health insurance that you're paying on behalf of your employees, not what was withheld from their check, but what did the company pay? So some companies, they split it. It's a 50-50 split. My company, we pay all the health insurance for our employees. So it's 100%. It's whatever you're doing for your employees is that health insurance is what the company's share is an expense. Also, if you have a retirement plan, it's that company match to the retirement plan. So if I have a simple IRA plan and the sum that's withheld from the employee's check, but then the company gives a little portion, or if I have a 401k, the company gives a portion, they have a match. Or if I have a SEP IRA and it's all company, the company pays it all, those are qualified expenses underneath the payroll cost, but the non-cash compensation, meaning you're not actually giving the money to the employee, but it's a benefit that the employees are receiving. Also, state taxes paid on company employee compensation. So what did the company pay on the compensation? Specifically for our area. All right, this is different across the country, but in our area, the DC metro area. So DC, Virginia, Maryland, even West Virginia, North Carolina. This is the state unemployment insurance, the SUTA. That's the only thing we're talking here. No other taxes, just the SUTA is an approved payroll expense. All right, that's used to get us up to that 60%. Now, as a reminder, funds withheld from the employee's check are not included as an approved payroll cost. And remember, the reason for that is because we're using the gross payroll to employees, which is before we withheld things. So if we also added in the money that was withheld, we'd be double counting money, and we can't do that. So anything I withheld from the employee's check is not an approved payroll cost. All right. I do want to talk about compensation to owners because this is sort of unclear when we all applied for the PPP, and they provided some guidance when they came out with the application and the final regulations that they released towards the end of May. And basically, owner employees, so we're talking S or C corporation, and actually I should probably take C corps because, well, you could have gotten a PPP in there, but the owner employees, the total compensation, both cash and non-cash.
I have lost your voice.
Oh, you lost my voice. Can you still hear me? Let's see what's going on here. Unmute. How about that? Do you have me? Let me find my chat box. Let's see if I have asked to unmute.
Go ahead. I think they can hear you.
Can you hear me now? Are we good? Awesome. Sorry about that. I don't know where I dropped out, so I'll just start on this slide. For our compensation to owners, our S or C corporation owners, the compensation that is allowed is the total compensation combined, my cash and non-cash. So my actual paycheck plus what the company is paying for health insurance or the retirement plan on my behalf is capped at the lower of the compensation that was paid during the 24-week period. What did I actually pay myself? Or a 24-week equivalent in 2019. What was the equivalent payroll that I got in 19? So if I only paid myself combined, if I took my gross payroll, if I added in the company paid health insurance and the company paid retirement in 2019, and say I only got paid a combined $80,000, well, then my allowed compensation is capped at $80,000. I won't be able to go to that 100 for my compensation as the owner, okay? If it's over 100, then I'm capped at $100,000. This is a little different than all my other employees, because my other employees, they can have both the actual gross payroll plus the company paid health insurance and the retirement paid. For the owner, it's a combination of the two. It can't, if I add them together, it can't exceed what my payroll was for 19 or $100,000, whatever is less, okay? So we got to remember that, and that's something that came out with the final regulations recently that the SBA released. If I'm a sole proprietor, so I'm not filing a separate tax return as an S corporation or a C corp, it's part of my personal return, filing a Schedule C, and I'm self-employed, then I don't get a payroll. I get what we call replacement compensation. And those are those draws. That's the distributions you take out of the company to pay yourself. It cannot exceed the prorated portion, again, of your 2019 net income, either using the 24 or 8-week window, whatever you're choosing as a period. So I would look at your 2019 net income and take 2 weeks of that, not 2 weeks, 8 weeks of that if I'm using the 8-week window, or I'll take 24 weeks of that. That's the amount that I can't exceed. So if my income on my Schedule C last year was $31,000, then I can't exceed, wait a minute, divided by, I can't exceed $14,307. If my net income on my Schedule C for 2019 is only $31,000. So I'm limited to that, all right? It's not, you know, maybe I'm having a great year and I'm making more money than I did last year. It doesn't matter, I'm limited to what it was last year, which shouldn't be that much of an issue because the amount of money I could borrow was limited to that 2.5 weeks last year. If I'm a partner in a partnership, I'm a general partner, I'm still self-employed, but I'm capped at the prorated portion of my net earnings from self-employment, what came through on my K-1. Plus, if I had any Section 179 expense, and that's when I bought equipment and wrote it all off at once, okay? And that would be reported on my K-1. So I would subtract that from there. And then they also reduce it by the Social Security and Medicare, what the company's portion of that would be. So it's, for the partnerships, it is also limited. The big thing I want to get across to my partnership owners here and my self-employed owners is that there is no forgiveness exemption allowed for the health or retirement contributions that my company pays on my behalf as the owner. So that's a big thing to remember. And that was not clear when we're going through and getting these loans, but they came out with the final regulations and made this clear. So if I am the owner and I'm self-employed, it's just based on my net earnings of self-employment. I don't get to add in that health insurance. If I'm not self-employed, I'm an S corporation. Now I'm not self-employed, I'm an employee. Well, I got those caps, but it's the combination of all of my compensation, not both, but it's combined. So I don't get to do the 100,000 salary plus my health and retirement. It's $100,000 cap of it combined, or if it's my total compensation for 19 is less than 100, then I'm tied to that. So just so you guys understand that, if you have questions, pop them in the box and I will try to go over those at the end. So what are payroll costs that are not allowed? Well, again, compensation over $100,000 is not allowed. The employer's share of payroll taxes. So I said anything withheld from the check is not allowed. Those don't add in. But now I'm talking, this is the employer's side because we match Social Security and Medicare. While the employer's share of payroll taxes is not an approved expense, that's not allowed. If I have anybody whose principal residence is not the US, maybe I have an employee that I'm paying overseas, well, their compensation is not an allowed expense. If their primary residence, principal residence is not the US, then they're outside of the calculation. There's that qualified sick or family leave for which a credit is allowed under the Families First Coronavirus Response Act. That's the FFCRA that I was talking about before. So if I'm availing myself to that, I can't also use it for the PPP. And I also mentioned if I have payroll costs that are outside the 24-week period, or if I'm using the 8-week period, maybe I'm electing to use 8 weeks. Anything that's outside of those periods, I can't use. So it's only within that box. All right. So those are payroll costs. What are the non-payroll costs? Well, it's rent payments on real or personal property. So if I have a lease on a copier, well, that's an approved expense, as long as that agreement was in place prior to February 15th. Total utilities that I paid, that the company pays. That's my typical electric, water, gas, oil, but also my telephone and internet. And the SBA has allowed transportation costs, but I would caution you on this. They have not clarified this. I think when they're talking about transportation costs, it's not the normal transportation, you know, that you have your car and you drive to meetings and things like that. It's more if your business has a fleet. I think that's what they're talking about here. So I really personally advise my clients to sort of set the transportation costs aside. We'll go there if we need it, but if we can qualify with everything else, then don't use it. Unless you got a fleet, and then we can certainly talk about it. But the SBA has not provided guidance on this, so it's a little unclear. Also allowed is interest on any business mortgage obligations on real or personal property incurred prior to February 15th. So if I had a loan on my building, or if I had a loan, use the copier. I bought the copier. I didn't lease it. I bought it, financed it through my bank. So that's personal property. The copier is personal property. As long as that was in place by or before February 15th, and I was paying that, then the interest, only the interest, not the principal, the interest is an approved expense that I can use some of my PPP funds. Now, these are those ones that are limited to 40%. I can't go over 40%. So if I got a 100,000 PPP loan, only 40,000 can be used for this, all right? 60,000 has to be used for payroll costs. I can use more for payroll costs, but have to use 60, and no more than 40 would be used for these expenses, all right? Now, one thing that they do allow is both paid and accrued expenses are allowed. So when we talk about non-payroll costs, we don't have an alternative covered period. It's just the covered period. And it's from the date I got the money out 24 weeks or out 8 weeks, whatever you're electing to use. What were the checks you wrote during that time frame? The only caveat is, in my example, so I got the loan on May 1, I pay my monthly utility bills from May through September as my invoices arrive. I write those checks. I mentioned that my 24-week ends on October 16th. Well, I haven't got my October utility bills yet. I get those maybe in November, beginning of November. I haven't paid them yet. Well, the law allows you, when you get that bill, to go and say, okay, well, how much of this bill covered October? If the bill closed on October 31, then we could say half of it covered October. And so I'll be able to pull half of those expenses as non-payroll cost expenses that are approved. This is a little different than the payroll expenses. It allows us to bring that in even though we didn't write that check, okay? So it does allow us to accrue things, okay? So that's the use of funds. Now I want to talk about a couple of the rules that we have to make sure we don't trip on when we're asking for forgiveness. And this is talking about what's happening with our employees. One is our staff counts. So remember what I said, what's the purpose of the PPP? Its primary goal was to keep people from going on unemployment. The government said, you can apply to us, we will give you money so you can afford to keep your staff on the payroll. Therefore, they're not going out on getting on unemployment. So because of that, they do not want to see a decrease in employees. So they have certain look back periods where they're looking to see, well, what was your employee count during this time frame as compared to the period, either the covered period or the alternative covered period, whatever one you're using, okay? And let's look at those. So what we need to do as a business is we need to first choose what's called a reference period. And we have options. We can either go back and say, all right, what was our employee count between February 15, 2019 and June 30th of 2019? So what was our total number of employees, or what we call the full-time equivalent employees, FTEs, all right? We can also look at, if we don't want to use that one, we can look at January 1st of this year to February 29th of this year. So we can choose one of these, all right? Obviously, you're going to choose the one that helps you out, but you have an options. If you're a seasonal employer, and when I say a seasonal employer, you're a business that is only opens up during a certain point of the year. So think of like your swimming pools, you know, they're closed in the winter. They don't have employees in the winter. They're only opened up during this window of time, or if you're a summer camp or something like that. You really don't have employees outside of your season. I don't want to confuse, like myself, I have my tax season. I may have more employees during tax time than other time. That does not make me a seasonal employer. It's if my business is seasonal, okay, is what they're looking at. If I am a seasonal employer, I can use one of the first two, or any 12-week period between May 1st of 2019 and September 15th of 2019. So I can choose what I want to use, all right? Now, my eligibility for forgiveness is reduced by the percentage of any decrease I have in my employees. So for an example, we have a business with 10 FTEs, okay, 10 full-time equivalent employees in the reference period I chose. Now in my covered period or alternative, whatever I ran my payroll costs, I'm down to 8. That's a 20% reduction. That would mean 20% of my loan would not be eligible for forgiveness. All right, so we want to watch these because it could decrease our eligibility amounts that we could have forgiven. Now let's get some definitions. One FTE is a person who worked 40 hours a week. So if you have an employee that works 40 hours, they're one FTE. An employee who works less than 40 hours is a portion of a full-time equivalent. They're a fractional FTE. So for an example, somebody who worked 30 hours, then would be 0.75 FTE. You could round it up to 0.8, but you need to be consistent. So you either do that, I always go to 2 decimal points. So it's 0.75. If you don't really track the hours of your employees, but you know, these guys are part-time, these guys are my full-time, well, you got your full-time employees, you count them as one, but you can count your part-time employees as 0.5 FTEs, or basically a half of an employee. The only thing I want to caution is I can't mix it. So I can't say, okay, I have Sally and Joe, and they both work 30 hours each. So they're 3/4 of an employee, 0.75. But then I have Jim and Kevin, and they only work 10 hours each. But I'm going to count them as 0.5 because I can choose to count them as 0.5. I can't do that. Either all my part-time employees are at 0.5, or they're actually based on the percentage of their percentage of hours worked over 40, okay? One or the other, I can't mix it. So how do we do this? We'll calculate the total FTEs, the full-time equivalents, by first summing up all the hours per employee. So we'll create a schedule of all the hours per employee per week, all right? Capping at 40 hours. So if I had somebody worked overtime, we don't count overtime. They would be at 40. So if they put in 45, 50 hours, we don't put in 50 for that week, we put in 40. So we'll do it for each week during our period, our covered periods. Then we would take the average. What's the average at the end of the covered period for that employee? There are 40 every week, then we're good. They're 1 FTE, all right? So whatever it is. Once we do that for all our employees, then we sum that up and we figure out how many employees we had during that window of time, and that would tell us, and we'll compare that to what it was during the reference period. So we'll get that comparison, okay? Again, if there's a decrease, then that corresponding ratio also decreases the loan forgiveness. So we need to remember that. I don't want you to panic too much on this. Just be aware of it. I'm going to talk about some outs that we have, some ways we can correct this if you did have a decrease, even if some of it was not your fault. And there's ways that there are sort of escape routes that we can get out of here, or safe harbors is what they call it. So let's talk about the other one, the fourth rule. So this is the decrease in wages and salary. So I can't decrease an employee's salary or their wage rate more than 25% in my window, okay? If I did, again, it's going to result in a reduction in the loan amount. So let's look at this. In January 1st of 2020 to March 31st, 2020 is what I'm going to look at. That's my reference period. This is different from the employee count reference period. Remember, I could choose those. For my wage and salary rate, I cannot choose it. It's January 1st to March 31. Now, with this rule, this is a big one that I'm expecting some guidance on, because I don't know if they're going to make that longer or what the case is for the 24 weeks now. Okay, but right now, the way things are written, January 1st to March 31 of this year. What was I paying employees? What was the salary? If I had people on salary, what was their annual salary? What was their wage rate during that window? Okay. If then I look at my covered period or my alternative covered period, if I chose to use that, what was the salary I paid that same employee? What was the wage rate that I paid that same employee? If there's a decrease, then I'm going to lose a proportionate share of the eligibility for forgiveness. So let's look at the example here. A full-time employee's wage was reduced from 20 hours. So from January 1 to March 31, they're making $20 an hour. To now, in my covered period, I had to reduce them to $14 an hour just to keep the business operational. I couldn't afford to do it more. This is a 30% reduction. It's more than 25. If I reduced to 25%, it would have been $15 an hour, okay? So I'm $1 over the allowed reduction, okay? So what's that work out to be? Well, I will take that dollar and multiply it by the number of hours they were paid during the period that I'm looking at, my covered or alternative covered period. Let's say they worked 40 hours. Well, then it's $40 a week times 8 weeks. That's $320. If I'm using the 8-week window, then $320 would not be eligible for forgiveness. All right. Again, SBA hasn't released guidance. The way I read things now is it would be $40 times 24 weeks if we went over the 24-week window. I'm not sure if they meant that when they passed this law, that people would get penalized more because they're using a longer period. So I want to wait and see what they do, but it's entirely possible that they will stick to this rule, and it's based over the number of hours you paid that person. So it could be more if we had a wage reduction within the covered period or the alternative covered period. All right. So, but like I said, the guidance isn't out there yet. We'll wait to see. Just before we get on, I logged on to the SBA site to see had they released anything, and they have not released things. So we just got to wait and see. All right. So we have these two reductions. We have the FTE reduction and we have the wage and salary reduction. The forgiveness reduction only applies to the portion of the decline in wages that is not attributed to the FTE. And this is an important thing because some people may say, well, gosh, I had to reduce the number of hours I had my staff because I just couldn't have them working all the hours. We weren't allowed to. And so I had to reduce the number of hours they're working. So maybe you're not meeting that FTE count. Your number of employee count has changed because the hours that you have for those employees have changed from your reference period to what it is now. Well, because maybe I had somebody on salary and because their hours changed, well, now the amount of salary they're getting has changed. I want to make it clear that you're not getting double hit. If the reduction was due to the FTE, then you're not subject to the wage. So in our example, we get a 40-hour employee, salary is reduced in half because hours were cut to 20 hours. Because the 20 hours is what reduced their salary, then the wage reduction would not apply since this was caused by the reduction in hours, not the reduction in the salary, okay? So just so you know, you don't get hit by twice on this, okay? All right, now as I mentioned, there are outs. They have written several safe harbors in the law that protect us on these. And so what are those? Well, if you eliminate the reduction in the FTE, so maybe I reduce my number of employees or I reduce the wage rate or their salary. Well, as long as I fix this, then I'll be exempt from the loan forgiveness reduction. Gotta fix it though by December 31. Previous to the change in law, it used to be June 30th. You might have heard that. With the new law that got bumped to December 31. So now I have it to December 31 to rectify the situation. It will cause some issues and we're going to talk about when do we apply for application. You probably can't apply for your application in this case until after December 31 because you want to show that you fixed this. Yes, during the look back period, in my covered period, I had a reduction, but now by December 31, I'm back up to where I was before. Well, if that's fine, and I meet that, then I'm not going to get hit by this forgiveness requirement for reducing it, okay? If I had employees that, maybe I have an employee that wasn't performing, okay, or something, so they're fired for cause, then they're not going to count against you in your account. So if you let somebody go during the covered period or the alternative covered period, you're not going to get penalized for that. If they voluntarily resign, or maybe they request a reduction in the hours, they don't want to work as many hours, so they physically request that, all right? That will not hurt you. So those are things somewhat out of your control. What you're required to do is to document this. You must document this. So if an employee is fired for cause, you better document the reasons why they're fired for cause. I would have an exit interview with that employee where they're signing off saying that, yeah, we had this meeting and I acknowledge I'm being fired for cause. If they voluntarily resign, you want to get that in writing where they give it to you in writing and sign off. The same thing with reduction in hours. You got to document this and you have to hang on to it. I'll talk a little bit later how long we have to hang on to it, but you got to document and keep this paperwork. If the employee declines, so if I had a decline in the number of employees after being laid off, so I have a client that is a painter and they had to lay people off. They didn't have the jobs and because of the money, lack of money before they got the PPP funds, they had to lay some people off. Then they went and got the PPP loan. They were funded, got the money, they had jobs to bring into work. They sent out a letter to their employees that they laid off saying, hey, come back to work. We have work for you. We got money to pay you. Come back to work. Some of them said, no, I don't want to come back to work. Well, that won't hurt you if that is your scenario, and it won't hurt this client of mine. What you need to do is you got to make a good faith written offer. Got to write it. So put it in writing, send it out to the employees and give them that offer of reemployment if they were laid off or furloughed. Got to offer the exact same salary or wage and hours that they were making before you let them go. All right, it's got to be the same job, same thing. Got to document that the employee rejected the offer. All right, so get them to sign that they are officially rejecting that offer. All right, again, got to maintain the records. You're required to maintain the record on that. And if you had an employee where you gave an offer of reemployment, they rejected it, you are required to notify your state unemployment insurance office. If you do not, then you won't qualify for this. And you got to notify them within 30 days of that rejection, okay? So in all of this, again, it's got to be documented. They're not going to go on your good word. You must, it's got to be written, has to be part of your business records, must document it, okay? But if I check all of these, then that reduction in employees won't hurt me as far as reducing my eligibility for full forgiveness, okay? Now, the new law that came in June added two other things on this, okay? One was, well, maybe I just can't hire similarly qualified employees for unfilled positions, okay? So I've been advertising and I just can't hire somebody. And I was not able to hire them before that December 31 date. Well, then you will be able to get it out. You won't be affected by this. Again, you want to document it. You want to document that you're posting and searching and actively looking to hire people. For applicants you got, you want to make sure you're documenting why they did not qualify if you did not hire them. Okay, so you need to document this, all right? The other caveat they have, and we still got businesses that are affected by this, and if it goes to the end of the year, especially if we have a resurgence, it says, if I can't return to the same level of business activity, I'm not allowed to get there as where I was prior to February 15th, due to compliance with requirements established or guidance issued by federal regulatory authorities, where I would say, they don't say state authorities, but I would believe that if your state is saying you cannot open up or you cannot have as many staff or whatever, and so it's because of these regulations is why you can't be at where you were during the period between March 1 and ending on December 31, then it's not going to hurt you. Now, those guidelines got to be relating to any worker or customer safety requirements related to COVID-19. So if they're saying because of safety requirements and for your staff or safety requirements you got to do for customers, and because of that, you can't meet that and therefore can't get to the same business activity, and therefore I don't have the same number of employees, well, it's not going to hurt you. All right. Again, document, document, document. Got to document all this. Why am I not meeting it? How can I, what is the authority? What is the regulation that's keeping me from meeting this and getting back up to my staffing? Okay. It can't be, I just don't have the business. All right. It's got to be an actual order that you're complying to for various regulations or guidance that are being issued. Okay. All right. So those are our main things with forgiveness. So if we go through, we fill out the application, we're great. When we're all said and done, I mentioned there's a fifth rule, and that is certifications. There are actually 7 certifications that you're making when submitting the forgiveness application. On that application itself, we got 7 certifications. They don't mess around with this. Basically, what you're doing is you're stating that all facts presented are in fact true and accurate. And I want to stop for a second here. A lot of times businesses outsource, and you guys, who knows, maybe you come to me and you say, Bob, I want you to help me out with this forgiveness application, help me with my calculations and help me do this. That's great. We're going to help you. But when you turn in that application, you better know exactly what those numbers are and that those numbers are accurate. Okay. You can't just go, well, he said they were, so I guess they are. That doesn't count, because when you're signing this application, you are stating that you know for a fact that these are accurate. All right. The assertions, what you're saying on the application is correct and accurate. What you use the money for is correct and accurate. All right, you got to say this on the application. If you don't, and maybe you relied on your accountant, okay, and you didn't really understand things, maybe they made a mistake, and you get audited by SBA and they say, well, we're going to penalize you because of this mistake. You can't say, but I relied on my accountant. That's not an out. You got to make sure. So it's on you, the business owner, to make sure that the stuff is correct. And the penalty is pretty stiff. It can get as high as 30 years imprisonment and or a fine up to $1 million. So that's a pretty hefty slap on the wrist if I make a mistake on here. So you want to make sure things are correct, okay? Because realize this is loans. And if we don't do things correctly, this is bank fraud we're talking about. And so we don't want to mess around with this. We want to make sure it's absolutely correct and what we're stating is correct. So I just want to mention that, and that's why I wanted to talk about the borrower's certification. I think a lot of times we get these, we go up, initial sign, boom, and we don't really read them. And you really need to make sure you read this and understand this, okay? All right, let's talk about that application process a little bit. So we can file the loan forgiveness application with the funding bank anytime upon the completion of the covered period, or if I'm using the alternative covered period, upon completion of the alternative covered period. Now, when I say the funding bank, it's the bank you got the money from. Who did you apply for the loan? If I went to, I don't know, let's just say QuickBooks. QuickBooks was doing loans. And I got the loan from QuickBooks, but I got my bank and it's easier for me to go downstairs and get my application to my bank. I can't do that. I got to go back to QuickBooks and give them all the stuff to apply for the forgiveness. The bank where you got the money is going to determine if you can get forgiveness or not. So I got to comply with them. I got to find out what they want to see and so on and so forth, okay? Only the loan amount is forgiven. Any interest that is accrued while I had that money from day one, if I got the money on May 1st, interest started accruing, all right? That interest is always due. That will never be forgiven, all right? If I had an EIDL advance, that advance will be subtracted from the forgiveness total. So if you applied for the economic injury disaster loan online with the SBA, and as part of that, they had an advance grant that you can get up to $10,000. If you got that $10,000 and I got a PPP loan of $100,000, then only $90,000 of the PPP will be eligible for forgiveness. Now, why is that? That advance grant, that $10,000 of my EIDL loan does not have to be paid back. That's a grant. I don't have to pay that back. But what they've said then is then you can't also get the equivalent amount of the PPP treated as a grant and have it forgiven, okay? So realize that. Now, when I turn in the application, my bank has 60 days to approve or deny. If they approve it, they're going to send it on to the SBA. The SBA, once they get it, has 90 days to approve it or, and fund the bank. So they got 90 days to process this. So we're talking 150 days. Basically, this is, a fair amount of time that can take for them to approve this. So don't think that it's going to happen within a week. So I just caution you to be patient through this process. If you are denied any amount and you don't agree with it, you do have 30 days to appeal that. And you're obviously going to want to appeal it with documentation to show why you believe that the amount that they denied should not have been denied. So in that process, you're going to work with your bank with that, provide them whatever they want to see, okay? Any amount that eventually is not forgiven becomes a loan. And that loan has to be paid back over 5 years, but it's only at a 1% interest rate. So it's not that bad, but it's still, it has to be paid back for anything that is not forgiven. If it was forgiven, it doesn't have to be paid back. So what do I get to submit with the loan? Well, I need to turn in the application. There's an actual calculation form. It's got 2 pages. One page has got the actual calculations. The second page is all those certifications that I'm signing off on. I also have to include a Schedule A, which is a document that lists my employees and so on and so forth, okay? For the FTE counts and the wage and salary counts, all right? So I got to include both of those. I need to give some backup, some documents to go with this. So I got to provide bank statements or third-party payroll reports showing the money that I paid to my employees, okay? If I have payroll tax forms, if you have payroll, you're going to have payroll tax forms. And these are my 941s, basically, is what I'm talking about, the Form 941s you file every quarter. Well, I get to include in this forgiveness the actual forms that were issued that cover the window of time. Our time is May 1 that I was talking about, the example, to October 16th. May is the second quarter, so I have to include my second quarter payroll tax forms. October is third quarter, which means I need to include my third quarter payroll forms. Actually, it's fourth quarter. October is fourth quarter, so I'm going to probably include my fourth quarter payroll forms and third quarters, okay? Any payment receipts, canceled checks, account statements, or whatever that shows that health insurance that I paid, or retirement contributions that I paid. So we want to show the proof that we actually paid these. Documentation that shows the average FTEs. So what are those average hours and such that I paid my employees, as well as what was their salary or wages. I get to provide documentation that shows that. It's back to being in school. When you did a calculation, you had to show your work. Same thing. I got to give the paperwork that shows how I calculated that I'm not subject to the reduction, okay? And I got to do it both for that reference period I chose, as well as the covered period. So I got to provide it for the periods that I'm comparing these, because I'm doing the calculation on the application, but they want to go and verify that calculation, make sure it's correct. And so I get to give them all the documentation that I used to do that calculation, all right? For non-payroll expenses, then the receipts or canceled checks for payments paid for my utilities and such. For interest that I paid on loans, then I want to see a lender account statement that was in place from February that shows that I had a loan in February, as well as for my covered period, the time that I was using the money. If I have leases, then I need a copy of the current lease, canceled checks or receipts for payments that were actually paid, or a period, a statement for the period that I used the funds, as well as the February to show that I had in place by February 15th. So I can either have the statements that show that I spent this money and had it in place before 15th, or I can have a copy of the lease and the canceled checks that show it, but the documents to show that I actually spent this money on the expenses. Same thing with utility payments, receipts, canceled checks, invoices, account statements, something that shows that you actually paid this, okay? All that stuff has to be submitted. Now, there are documents, though, that I have to keep. First of all, any documentation that's supporting the listing of each employee that I included on my Schedule A that I turned in. So where's all that work for the Schedule A? To include the stuff to provide for the calculations. So all that backup, I got to keep that, all right? Documentation of any employee rehires or offers, any refusals for them to come back, any for-cause firings, voluntary resignations, or requests for reduction in hours. Remember, we have to document that, and I got to keep it. Have to hang on to that documentation, okay? Any documentation to support my reduction in FTEs, or if I'm availing myself to the safe harbor, I corrected it by December 31. Well, where's that documentation that shows that you got back up to where you were before? We got to keep that paperwork that proves that I corrected it by the December 31, okay? Any documents that I used to actually apply for the loan. What was all the stuff I pulled together to actually apply for the loan? Got to keep that, all right? I have to keep that, including the application. All must be kept and retained by the business. And the next question always is, well, how long? It's 6 years. No less than 6 years. I got to keep this stuff for 6 years. Statute of limitations is 7 years for taxes. So I tell my clients, you know, if it's easier, keep it for 7 years, put it in with your regular tax stuff, and it's just in that 7-year cycle. But minimum is 6 years, no less than 6 years. If I'm going to apply for the loan, then I got 10 months after the date of the covered period. So in my example, I used May 1, my covered period ended October 16th for the 24-week period. I got 10 months to the day from October 16th, 10 months out to apply for the forgiveness, okay? If I go 10 months and a day, I can no longer apply for forgiveness. So I got that 10-month window, okay? As a reminder, if I'm looking myself to use some of those payroll tax credits for, I gave leave for that, remember the flexibility, Family Flexibility Act, I can't use that payroll for the forgiveness portion. So just there's a reminder on that. It's not eligible for forgiveness, okay? One other thing I want to mention that came out with the new bill that was passed, this is something that was not available to businesses that receive PPP funding at first, is early on, the IRS came out and said, you know, we're going to give you a little bit of a break on your payroll taxes. And basically, as I mentioned, we withhold from employees' payroll, Social Security and Medicare, and the federal and state income taxes. The company then matches Social Security and Medicare. And all of that goes to the IRS. Well, what they've said is the employer's portion of Social Security only, not Medicare, Social Security only, can be deferred. You don't have to pay that to the IRS yet. So beginning on March 27th through the end of December this year to December 31, 2020, I don't have to send the government that Social Security tax. I can wait to send that Social Security tax for the employer's share. Or if I'm self-employed, it's 50% of my self-employment tax, okay? So I don't have to send that in. I can wait until December 31 of 2021, and then I have to pay 50% of the amount that's due. And then the balance that I'm deferring has to all be paid by the end of the following year, December 31 of 2022. So that gives you some flexibility. This is new. This wasn't available for people with PPP fundings before. It is available now, okay? So that may give you a little bit of a breather on that. Before I get into your questions, I want to answer a couple of them that are standard answer questions that I've been getting. One is right now, as the law stands, you have either, if you've already got the loan, you got either 8 weeks or a 24-week period to choose from that you can use the money. I can't choose a period that's in between that. I can't say, okay, well, I'm going to use the money in 12 weeks. And therefore, I count my FTEs within 12 weeks. I look at what I paid my employees in 12 weeks. I can't do that. It's either over 8 or it's over 24 as the law stands. Now, SBA may provide some guidance on this, but as of things right now, the way the law is written, I can't do that. It's either 8 or 24. Owner payroll costs still count as payroll costs, but when we're doing our FTE calculations, when we're looking at the number of employees we have, the owner is not counted as an employee, okay? So if I'm self-employed and I have no employees, then I don't worry about the FTE calculation. That's a non-issue, okay? I also don't need to worry about the wage limitation if I'm the only employee and I'm the owner. So if I decrease my wages, but didn't increase any of my employees' wages, then I'm not subject to that because the owner is outside of those calculations, okay? But my actual payroll costs are eligible costs that I can use the PPP funds for. And the big one, so the amount of the loan that is forgiven is not taxable, all right? They've come out and said that is not taxable. It's a grant, but the expenses that I used the money for that was forgiven, I cannot deduct those expenses. So if I borrowed $100,000 and let's just say I got it all forgiven, that $100,000 forgiven, and I use 60% of it for payroll, then 60% of my payroll expenses are not deductible. And if I use 40% for other costs, then 40% of those other costs are not deductible on my taxes. Why? It was not my money. It was the government's money, okay? They will not allow you to deduct something that was paid by somebody else. And because that money was forgiven, it's not your money. They just gave it to you. It was a gift, okay? So I don't get taxed on the actual forgiveness, but I kind of do because I can't deduct the expenses. Now, how that's going to work out on your taxes is we have to wait to see how the IRS is going to do that. But I just want to let you know that. So when we're looking at planning and people are like, gosh, you know, I got a $70,000 loss at the end of the year because of all these expenses, but I borrowed $100,000 of PPP. Well, actually, you got a $30,000 profit because you're going to lose $100,000 worth of expenses provided it all was forgiven. Okay. That was a lot. And we're a little over 12. I knew just going through these slides, I was going to be about an hour. I'd love to go over the questions now. That is my contact info. If you think of something later on, by all means, you can certainly email me. Our office is helping small business owners going through this, and we can always talk about that if you need some assistance with that. I also work with several business centers, and I can refer you to them that they, there's pro bono services that you can go through them, and they may be able to help you too. If you're on a budget and financially you can't afford to hire somebody, that's an option as well. So just let me know and I can put you in touch. So what questions do we have out there, Hakam? Are you there?
Somehow there's a technical problem. I can't hear you. I'm listening to you from YouTube.
Oh, okay.
I
then
hope you can hear me.
I can hear you fine.
Okay. So I've got some questions from personal messages and from the forms.
Okay.
The first one is, okay. There are two accounts in our bank account. And does it matter which account we use? The same company account?
So you have
And
two bank accounts.
Use, can we spend the money and claim forgiveness from any account? Or should it be the exact account that the PPP loan was transferred?
Okay, that's a great question. So the question is, you know, I have two bank accounts, and we recommended this a lot to our clients was, if you got the PPP money, put it in a separate bank account, separate from your operating funds. At the end of the day, that's not a requirement for forgiveness. That was done just so you can track things better, okay? So if you paid for things out of your operating account and you got stuff in the PPP, that's fine. You just need to show you had expenses that you paid could have come from either one of the accounts that covered that are qualified expenses. So it doesn't matter what accounts. For cleaning, what I was recommending to a lot of my clients is, say we issue payroll and we also paid some utilities and things like that. We would write up a sheet and say, okay, here's my gross payroll. Here's my health insurance that the company's paying. Here's the retirement the company's paying for this payroll. Here's maybe some utilities, and I get a total. Maybe that totals up to $6,000. Well, that's going to be my cover sheet, and I'm going to transfer $6,000 from my PPP account into my operating account. All right, and I pay the stuff through my operating account. Then on that cover sheet, I have all the backup that supports the numbers on the top. So I'm already gathering the paperwork that I need to turn in eventually for the forgiveness. And so that just keeps things clean. But if you don't do that, that's fine. You just need to show you spent the money. It doesn't matter which account it comes from.
Okay. And another question is, like, if the SBA EIDL loan and PPP loan fall on the same account, so as you said, how can we track or separate the payments because it's on the same account? How should we separate the payments?
Again, you don't need to separate the payments. I think you do need to show that you're not using the EIDL money for the same expenses that you're using the PPP loans for.
And for the bonus or compensations, whether it's cash or check, like how should it be paid? Like direct checks can be written to staff as bonus or compensations, or what should be the best way to write checks or give, like, to do the payments?
Okay, then. So I'll talk about bonuses in a second. I just want to get back to the EIDL. So it doesn't matter what bank account you're paying this stuff out of. If you got your PPP money and the EIDL loan, you got the EIDL loan, and it's all in a separate, in one bank account, not in your operating account. That's fine. You just want to be able to show that you had enough expenses for the PPP separate from expenses for the EIDL. You can't use the same money. So it's more of your tracking of your expenses, not necessarily what account's coming from. The reason why we want it in separate accounts is if we're paying out of that account, then that's a nice clean way to show how we're spending that money and that it's only for those expenses. That's the reason why having it in separate accounts, but it's not required. Now the bonuses, you got to document it. So you can't just give somebody a bonus like here's $400 and give them cash of $400. You got to document it. You got to have something that prepares this. So you should be giving them a check for that. And that check is got to run through payroll. All right. So that means it's subject to payroll withholdings. I can't just write a check for $400 and call it, here's your bonus. All right. It's got to run through payroll. It's got to be reported on their W-2. I got to withhold Social Security and Medicare taxes and things like that. I want to make a clarification. Anybody that you are paying and not withholding taxes on. So if I don't withhold Social Security and Medicare, I'm not withholding federal and state income taxes and things. And maybe you're at the end of the year issuing them a 1099. They are not an employee, and those expenses are not eligible PPP expenses. It's not payroll, okay? They are a contractor, and those are contract expenses which are not allowed, okay? A lot of people view their 1099s as employees. They are non-employees. Employees are people that are withholding taxes on. So if we do a bonus, we gotta withhold the taxes on that. Any others?
Okay. And another questions about the utility payments. For example, like certain utility expenses are not specifically mentioned. Example, the liability insurances or garbage collections like bills and stuff. Are they included, or should we be cautious and not claim those kind of expenses for PPP? Are they forgivable or not?
They are not. So they're very specific on what is allowed. The SBA has specifically listed the utilities, and utilities are gas, electric, oil, if we got oil, it's water or sewer. It's your telephone and internet, okay? They allow that, and then they do lump transportation in there. But again, I give you guidance. I caution you on the transportation. Before you include that, make sure either your lender is giving you guidance on what's allowed for transportation costs, or we find there's something that the SBA has released. They have not released anything other than just saying transportation costs. So we don't know if they're talking about, maybe I'm a plumber and I got 8 trucks that are out there. That's a fleet, and I think that's what they're kind of talking about. Not that I have my car for my my business. I incur transportation costs just driving around to clients and things. I don't think they're talking about that. I think they're talking about fleets. So I would just caution you on transportation. Outside of that, no other expenses are allowed. So insurance, garbage collection fees, regular, like website maintenance. Maybe I have a consultant that I pay. Your favorite accountant, none of it is approved costs, okay? Those are other costs that you just have to, but we can't use the PPP funds to pay for that. Well, you can use the PPP funds to pay for it, but that dollar amount that you used would not be eligible for forgiveness.
Okay. And how about the storage fees? Like sometimes companies, they rent storages to keep or warehouses. This is a bit detailed question, but still there are people asking. Are they considered as rent payments?
You know, it doesn't say it does not. I would try to qualify under everything else and keep that on the side, but you may be able to include that because it is rent. It is rent for real property. So they're not necessarily saying office rent. It doesn't say anything that it's got to be an office. Okay. Now I do want to caution you. Some of us, maybe we work from home. Payment to yourself of rent for your home office is not a rent expense. Okay. You can't do that. We're talking, we actually have a lease agreement with another organization. So storage, the business has got a lease arrangement with this other place. And I would say, yes, they probably would allow that. I mean, if they're allowing leases on personal property, I would imagine they would allow that as well.
I check the chat session. There seems to be no more questions for the moment. Would you like to have your last remarks? What would be your recommendations? That was already all about the presentation. But, would you have any final remarks that you would
I do have a couple
like
of
to
them.
share with us?
All right, thank you. I do have one big one. So if there's one thing I learned when we're helping clients go through the application process and when they were applying with their banks, was that every bank did it somewhat differently. My bank, I turned everything in by paper. Well, I scanned it and uploaded it, but it was all paper. It was a paper application and things like that. I had to do it all on paper, okay? I know other banks did it all online. You had to fill things out on their online form. And they requested specific things, okay? And then another bank was online and they requested specific things, but it was slightly different than what this bank asked for. So they're all a little different. When you go to apply for the application, talk with your lender. Who was it that gave you that money? Make sure you meet what they want to see. Remember the slide that I had when we apply. We're applying with our bank, and it's the bank that first says, are you eligible or are you not eligible for the loan? So you want to make sure you keep them happy. You want to make sure you meet what they want to see when you do this. So I can't stress more as you're getting close to the window of time when you want to apply for forgiveness. They're not ready yet, unfortunately, because of issues with the SBA and the new law that came out. But as soon as they're ready and you're ready to apply, you want to make sure you meet their guidance and what they're saying they need and how they want it presented to them. So if they got a website, you got to go through their website. All right. Doesn't matter that there's an application paper out there. They need to see it their way. The other thing is, don't be afraid to get help on this. All right. A lot of the banks, they're not going to do the work for you. Okay. Maybe you got a great relationship with a banker that may help you. That's going to be rare. Okay. A lot of the banks that I was aware of before, they didn't come out and calculate how much you could borrow. You had to do that and then provide the documentation to support that. The banks don't calculate that. It's the same thing with the forgiveness. You don't just give everything and then they come and say, oh, well, this is how much you can get forgiveness. You got to calculate that and notify that. So don't be afraid to ask for assistance before you turn this in to make sure that you've done everything correctly, because you don't want to turn it in thinking you did it correctly just to have it denied because you didn't do it right. All right. So it's worth it when we're talking about thousands and thousands and thousands of dollars. it's worth it to pay possibly somebody, or as I mentioned, see one of these business centers. It's the Community Business Partnership is in Springfield. They're off of Lower Steel Court. They can certainly help you out. The Mason Enterprise Center is in Fairfax on University Drive. They most certainly can help you out. They're part of George Mason. Those are nonprofit organizations that do business advisory and counseling. I think the city of Alexandria, the Alexandria's Chamber, they have a business incubation that's tied to that, and they may be providing counseling, so you may be able to reach out to them as well if you need assistance and you just can't afford it. So, but realize that you don't want to do this on your own and just base it on your own understanding. So I do want to thank you for your time. I thank you for having me and allowing me to present this. I know it's a lot. It's a lot of information I just threw at you. This changes. It changes all the time, unfortunately. So you can constantly go out to the SBA's website. The loan application, the old loan application is out there. If you wanted to read it over and look at it, you can see that. And so that's on the SBA's website as well. But that will help you stay up to date as to changes that the SBA comes out with. So thank you.
All right. Thank you very much, Robert, for the beautiful presentation. I believe it's going to serve as a great reference for us. And again, I'm going to share the link with all the participants. And thank you very much for your time. I wish all businesses great success in their applications, and all will be forgiven, and it's going to be a smooth process. And thank you again, and hope to see you in another program.
Thanks a lot.